Good morning, everybody. It's Thursday, August 8th, 5:25 a.m. Central Time. Grain markets are mixed this morning. December corn futures down 3/4 cent at $4 even. November soybeans down 1 at 10.17 3/4. December Chicago wheat up 2 1/4 at 5.64 1/4. December Kansas City wheat up 3 at 5.75 1/4. December spring wheat is up 3 1/4 at 6.10. Let's get into this biofuel news.
So the EPA is investigating the supply chain of biofuel producers. The agency has launched investigations into at least 2 biofuel producers amid concerns that some producers may be using fraudulent feedstocks. There have been suspicions that feedstocks labeled as used cooking oil may actually be virgin palm oil, which is cheaper and less environmentally friendly. Analysts claim that the surge in used cooking oil imports from Asia in recent years is not consistent with the amount of cooking oil utilized in the area. The EU is also investigating fraudulent feedstock imports. The companies targeted in the investigations by the EPA have not been identified.
EPA has been conducting these investigations since July of last year. So apparently this has been going on for over a full year now. This is a quote from an EPA spokesperson regarding the matter. EPA has conducted audits of renewable fuel producers since July 2023, which includes, among other things, an evaluation of the locations that used cooking oil used in renewable fuel production was collected. These investigations, however, are ongoing. We will not be able to discuss ongoing enforcement. They refused or did not say who exactly, in terms of companies or entities, are being investigated. This is a big deal. There was we covered this about a week ago. There was a letter from a bunch of senators that went to Janet Yellen. This was one of the quotes from the letter, which I think sums up this situation. If more is not done to support the production and utilization of domestic feedstocks, the U.S. will see its renewable fuels industry shift focus from domestically oriented feedstocks toward imports, allowing U.S. tax credits to fund the importation and use of foreign feedstocks to produce biofuels would put U.S. agriculture at the back of the line, while foreign agricultural producers are subsidized by U.S. taxpayers. So me, as a taxpayer and not a farmer personally, I would rather see the tax credits. I'd rather see the U.S. farmer benefit from the tax credits than China or somebody else. And as a farmer, if this thing does go the right way and they're able to identify fraudulent used cooking oil, which I know is a crazy phrase in itself, and get rid of it, ban it, regulate it, maybe that means that more U.S. feedstocks are used in the production of biofuels, corn ethanol, soybean oil. That's what we need to happen. So this is an area of contention. This letter from Senate also talked about 45Z. I know a lot of people have problems with pipelines and being told how to farm and that sort of stuff. But guys, I think ultimately this could be a very good thing for the demand base, just from a pure supply and demand standpoint.
Nebraska will be home to a new sustainable aviation fuel plant. DG Fuels, a U.S.-owned SAF company, has chosen Phelps County, Nebraska to be the site of its first Midwest SAF plant. The plant will produce 193 million gallons of SAF annually and provide 650 jobs. According to Nebraska's governor, the facility is estimated to have a $55 billion economic impact on Nebraska over the next 30 years. For its carbon feedstock, the plant will utilize low-value agricultural byproducts such as corn stover. It will also incorporate numerous kinds of clean hydrogen feedstocks such as ethanol. Production is expected to begin in 2030.
Shout out to Phelps County, Nebraska. I know that we have some viewers and listeners from Phelps County. I know that for a fact. Phelps County is like south central, just south of I-80. Nice location. The only problem with this is that the start date is until 2030. So as with a lot of things in the biofuel and SAF space, it seems like the can just keeps getting kicked down the road like a little bit further. Like 45Z was supposed to be a 2025 thing. The lack of guidance seems to be nowhere to be found. So a lot of these projects, I think, are still going to be a go, but we need some help from the government. And as I'm told, as Pete discussed in our premium video earlier this week, DC is just in a gridlock and they can't get anything done. And they may not get anything done until after the election, which is really a shame because this is all guidance we could have used a while ago.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's video with Matt Bennett?
Matt was on yesterday. He's done some traveling across the Corn Belt, given his speaking engagements, things along those lines. Talked about the potential for record yields rather across the I states. When you combine Illinois, Indiana, Iowa, do we have a record corn crop? Yeah, it's probable, or record corn yields at least. We also talked about the idea that perhaps all the bad news has been discounted into the marketplace and that concept. Touched on the Pro Farmer Tour, which is forthcoming. What does that mean? Talked about basis, discussed or tried to not predict, but thoughts on when the next marketing opportunity with regard to corn and soybeans may occur. Also touched on the cattle market. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. Cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. You will get our morning email, which goes out like clockwork at 5 a.m. Central Time. That email includes all of our morning headlines, our 6 most recent premium videos, all of my cash grain marketing recommendations, a super simple approach to grain marketing. I'll give that deal a shot this morning, guys.
Early morning rains pushed across Kansas along with parts of Nebraska and southwest Iowa. Rains associated with Tropical Storm Debbie continue to impact the East Coast and present flooding risks in some areas. Temperatures across the U.S. Corn Belt are slated to run mostly below normal through the middle part of next week prior to a return to more normal temperatures. The 10 to 15 day Euro model, however, favors the odds of above normal temperatures in many areas of the region. Corn Belt rainfall will be limited over the next 5 days. The 5 to 10 day forecast indicates that rain returns to some areas of the West, leaving most of Illinois, Indiana, Michigan, and Ohio dry.
There's really not much Corn Belt rain at all in the forecast for the next 10 days. I know that areas out east, your Carolinas, Virginias, places like that, have been excessively dry. The corn crop out there is not going to be very good. I know it's not a big needle mover or anything for the markets, but this is going to be too little too late. Kansas, Oklahoma could probably use the rain. They've been a little bit drier. So I don't know. The days of trading the weather forecasts in and out are behind us. Pretty soon, we're going to start focusing on South American weather, planting conditions, that sort of thing. So we're going to kind of shift gears away from U.S. weather with regard to the market. Of course, barring some late season anomaly, you run into early frost, you run into flooding, whatever. I guess we would discuss that, and that can move the markets. But just the general temperatures, rainfall patterns, they don't matter to the market as much now as they did, say, a month ago.
U.S. ethanol production declined last week. Weekly output of 1.1 million barrels was down 3.8% on the week and unchanged versus the same week last year. Ethanol stocks were pegged at 23.8 million barrels. The print was down 1% compared to the previous week, but up 4% compared to the same week last year. Implied gasoline demand was down 6% compared to the previous week and down 1.6% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is up 2.3% compared to the same period last year.
Ethanol production is strong, and we need it to be strong. When you look at a breakdown of the demand base for U.S. corn, ethanol is projected to account for 37% of all demand for U.S. corn, which has been pretty normal over the years. Feed usage slightly higher than that at 39%. Exports are projected to be 15% of the demand base, but the exports are the item that can really move the needle quickly. Like, things can change really fast. I know you guys are sick of hearing about China, but if China were to come in as an example, they could move the needle with regard to exports and therefore the balance sheets very, very quickly. Ethanol tends to be more steady. Feed usage tends to be more steady. You don't see as much, say, volatility in the demand numbers or projections with those two pieces. So ethanol's good and the margins are good. Exports are the item that we need to see improved.
Mortgage rates plunged last week. The 30-year fixed mortgage rate declined to 6.55%, its lowest level since May 2023. The 5-year adjustable mortgage rate fell to 5.91%, its lowest level this year. The decline was attributed to weak economic data that could potentially cause the Federal Reserve to aggressively cut interest rates. The drop in mortgage rates triggered a surge in refinancing applications last week. Additionally, mortgage applications to buy a home increased by 0.8%.
There are a lot of people in their 20s, 30s, and maybe even older than that really need to buy a house and they can't because they're so expensive. So I guess if there was any silver lining to the sell-off that we've seen in the stock market, it's maybe this. Home prices have certainly backed off a little bit the way it appears, and now you've got rates backing off a little bit. 6.5% is still far from ideal. Everybody wants that 3% mortgage that you could have got a few years ago. I don't know if you're going back to that anytime soon, but to come down off of a peak near almost 8% down to 6.5 is certainly helpful. What did cattle do yesterday?
They were mixed. Feeders were down 37 cents to $1.67 lower. Live cattle, however, they were up 7 cents to 62 cents higher. Box beef has now given back all of its gains from Monday. Yesterday, choice ended the day at 313.85. That was down $1.96, and select ended the day at 298.83. That was down 79 cents.
Outside markets on Thursday, U.S. dollars about flat. Stocks are off just a little bit. The S&P's down 10. The Dow Jones is down 90. Bonds are up a little bit. Gold's up a little bit. Crude oil is down 18 cents in the September WTI at 75.07. Have a great day, guys. We'll talk to you on Friday.